JJ the CPA here. Hope you're doing well. How do you know that you qualify for this employee retention tax credit, and what is it anyways? Well, the first thing is are you a business owner? Yes. Are you an employer? Do you pay employees W-2s? That kind of compensation? Yes. Well, you're in the running. Was your business affected by the pandemic as it relates to a government shutdown or partial shutdown, as in a governmental order? Yes. You're in definitely contention to get the employee retention tax credit, whether it's in 2020 or 2021, from the dates that it was effective. Were your gross receipts down? Well, I don't know. Well, then get your gross receipts out, figure it out quarter by quarter, and determine if they're down compared to the same quarter in 19. Meaning, when you're looking at a quarter in 2020, compare that same quarter in 19. Was it down at least 50% in 2020? You're going to qualify for the entire quarter. Do the same in 2021. Take your first quarter in 21 and you compare it to the first quarter in 2019. You heard me correctly. 21 is compared to 2019. Down 20%, you qualify. Check this out. In 21, if for whatever reason in that example, your first quarter 2021 is down 20% in terms of your gross receipts compared to first quarter of 2019, then they have an alternative rule where you look at, well, did the prior quarter, was it down at least 20%? So in that example, if fourth quarter 2020 is down at least 20% compared to fourth quarter 19, then guess what? You qualify for first quarter. Now, the IRS is clear that if you qualify for the employee retention tax credit and your qualified period is when you had a governmental order, then the dates are the exact dates of that governmental order. It doesn't cause you to qualify for an entire quarter. If you heard different, they're just simply wrong. And go ahead and take a look at the link in the body of this to the IRS notices that give it to you in black and white. It's not even my opinion. It's very clear, especially in IRS notice 2021-23. Super clear. The other thing, though, is that if it's due to your gross receipts being down, then the wages for the quarter qualify. And if you're 500 or less employees, which is a lot of you, all the wages qualify. What? You heard that right. All the wages qualify. Okay? Up to, in 2021, $10,000 per employee per quarter of wages qualify. In 2020, it's up to $10,000 in wages per employee that qualify, but for the entire year. Now, where are we talking about? This started and this ended March 13th of 2020 through September 30 of 2021. So this is that time period that you're looking at. How do you get the money back? You file a Form 941X. It looks daunting. Maybe it is. Who cares? Because you're going to get a lot of money back. When you file a 941X, the IRS is going to send you a check. They're going to send you cash money, or at least a check you can turn into cash money if you're an employer. Don't look the other way on this. Who doesn't matter that it's complicated, right? I mean, just run the numbers right now, okay? Just do it really quick. What do you pay on average your employees per hour, right? So what is that? $10 an hour, $12 an hour, $15 an hour, okay? How many employees do you have, right? Let's say you have 4 employees. All right, so if you have 4 employees and you're paying $12 an hour, then take 4 employees times $12. That's how much you're paying those 4 employees every hour. Now multiply it by 40 hours. Okay, that's for the week. Now multiply that amount for the week times 4, that's the month. Now take that amount times 3, that's basically really what you're paying in a quarter. Now take that times 70% for 2021. That's the money that you would get back. Okay, now for the entire year of 2020, the tax credit is 50%, but that still adds up. And that's quarter for quarter in 2021. So if you're an employer, you've been affected by this, your gross receipts are down, or if you're not sure, you feel like they're down, you should look. We look at it for all of our clients. Filing a Form 941X is just a form with the IRS. You go through it. I'm encouraging people not to just immediately hire someone that's going to charge you a percentage to go and get this credit for you, because you can get it yourself. I've got a seminar. It's very inexpensive. I'll give you a link to it. It's immediate access. It's 3 hours. You get a PowerPoint to follow along with me that I present. I take you A to Z. How do you qualify? How do you know? How do you calculate it? 7 steps. Boom, there it is. And then you file a 941X. You say, hey, here's what we originally filed. Here's what the new amount is. And you get your money back. That 941X, the work is all done because your 941 is done. What's a Form 941? Form 941 is what you file quarterly as an employer with the IRS to say, here are my wages and the withholdings and the payroll taxes all at the federal level. Here you go. That's already done. You had to have already filed it. The work is done. A 941X is simply just going, well, here's all the numbers that we previously filed, and oh, I got a few minor differences. I have wages that are qualifying for the employee retention tax credit, and I hadn't even mentioned, if you pay your employee's health insurance, so employer paid health insurance, gets included in that. Now, it's still a $10,000 max per employee per quarter in 21, $10,000 max per employee for the year in 2020, meaning wages and health insurance, you arrive at that max of $10,000. But my point is that all you're then doing is saying, hey, I got some wages and I got some health insurance and here's my credit. So you're just adjusting a few line items. That's not worth a percentage. Now, if you didn't want to do the quick math, or you're like, well, employees, I got them all different, part-time, full-time, then go find a Form 941 for any of the quarters in 2020 or 2021 and pull out pretty much second and third and fourth quarter of 2020. You did get a little sliver of time in 2020 first quarter, or first and second and third quarter 2021. It's not possible you don't have them because they were already due. And if you haven't filed them yet, you got other problems. But you have that. Go to the line item that says total wages. Take that times 50% in 2020 or take it times 70% in 2021. At least you have an idea of what you might be looking at. You're right. There's maximums and the employees and this, and this. The other fallacy is that if you got PPP, you don't get ERTC. Boom, wrong. Couldn't be more wrong. And I walk you through that in the seminar. I got a bunch of videos if you want to watch for free. If for whatever reason you don't want to spend $197 to get a 3-hour video and have me walk you through it in A to Z and get all the worksheets and the links and all that stuff, that's fine. I got videos. You're not going to get probably everything that I'm putting in there. You could spend all the time and piece it together, or you can read it on your own and you can hop along and maybe you'll be able to get to it without my seminar. Probably, whatever. The point is go get the money. How long do you have to get it? You have 3 years from when your Form 941 was due. Okay, Form 941, it's due every quarter, right? But what's the actual date? We'll take the quarter, and then the end of the month following that quarter, that's the due date. And guess what? You don't even have to worry about that right now, because if you're watching this in 21 or in 2022, no one has yet hit the deadline for you to be able to file for the ERTC. You still have time because you have 3 years. So you can spend a lot of time. Like, well, when's that 3 years up? It's a long time from now. Why are you waiting? Go and get it, okay? Go get this. They're literally going to send you a check when you file a 941X. If you don't take my seminar, get with a professional. If you don't want to get with a professional and you don't want to take my seminar, then really get through the instructions of the Form 941X and get that thing completed and get it in so that you get your money. So even though the ERTC ended September 30 due to the infrastructure bill, other than a recovery startup business, you still can go back and get this money, literally get the money for wages that were paid March 13th, 2020 through September 30 of 2021. You're leaving money on the table, okay? You don't need to really go watch another video. You don't need to, well, do I qualify? Are you an employer? Yes. Were you affected? Yes. Were you down gross receipts? Yes. You're going to qualify now. Go figure it out in terms of now what period of time, what wages are getting to be included, and then the credit, boom. So literally, if you knew your gross was down in first quarter of 2021, then and you're 500 or less employees, really simple. Go to Form 941. What were your total wages, right? Times 70%. That's the maximum credit you're probably looking at. Now, you do need to look at all the employees for the quarter and go, well, did I pay any one employee more than $10,000 for the quarter? No. Then literally, if you didn't pay any employees more than $10,000 in quarter one of 21 in this example, then you're literally going to get a check for 70% of what it is that you paid your employees. Okay? So go and get this credit. Now there's a catch. What's the catch? Not for me, okay? The catch is, and there's no reason to not go get the money, but this is going to be an adjustment on your tax return, meaning whatever you get for the employee retention tax credit, it does reduce down your tax deduction for the wages. And anybody that cusses this right now, what are you cussing for? This is money out of the sky. You get it if your gross receipts are down. You get it if you were affected, okay, by a governmental order. There's no room for complaining at all, because this is money out of the sky to reward you for being an employer that paid employees. Okay? So check it out. Check out the seminar. At least just go to the webpage. You're not going to have to give me any information or an email to see everything that I'm going to give you. But check it out. Okay? A lot of people have been able to be helped by that. Either way, go and get the employee retention tax credit for yourself. Get this check for you, your clients, or your employees, or for your business, however this applies to you. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.